Hey guys, in the previous lesson you received our free bonus, namely a utility that will significantly ease your trading using the pumping station strategy and will bring you much more money than if you were trading manually. I also explained how to use its basic functions in the previous lesson. In this lesson, I will show you how to use the very useful and efficient smart closing function step by step. In the following lessons, I will also explain how to enable the averaging function, how to enable the ladder averaging function, and how to enable the martingale function. Using averaging is not mandatory, but knowing how it works is already beneficial.
So, regarding smart closing, let's start with the theory. Why does it work? Why should smart closing work at all? We look at the quotes chart and see that quotes move in waves, and after each wave of decline, there is a wave of growth. There are indeed local waves, and there are larger, medium-term waves. There are global waves, and if we take H4, we see that the price is moving almost horizontally on H4. In theory, we can wait for the quotes to reach some local decline, or increase on H4, make a sell trade, for example, here, and there is literally, though not with 100% probability, but with 99% probability, that the price will reach a profitable level after some time. But that would be foolish, because while we wait for the price to reach a financially beneficial level here, we could definitely make 20 financially beneficial trades on M15 and earn much more in that time. This is how smart closing works. We will be making a financial gain on M15 in most cases. For this, we first need to set our portfolio's profit factor, which should be 1.3 or higher. This way, we will trade and make a financial gain. And if suddenly we find ourselves at the moment when the price touches the closing level with a loss, we know that prices move in waves, and it's highly likely we'll touch another financially beneficial level after some time, with an almost certain probability of around 99%. We just need to wait patiently. Sometimes, it really is just waiting briefly. Look closely now. We had received signals at this particular point, whereupon opening said signal, and although unable initially close out profitably right there, at green levels already showing gains, albeit modest ones. That is, if we had closed at the red level, we would have incurred a loss. And here we simply made a profit. And all we had to do was just wait for an hour. For a little while. Let's analyze another option, another case. For example, here. To make it clearer, at the beginning of the process, we will establish the time at which we received this signal and the level at which we opened it. Now, we will remove these other options in order to avoid confusion. Thus, we had a buy trade here. At the red level, you see the indicator shows that we should have closed here, but we did not close. We use a smart closing algorithm. At the green level, we did not reach the profitable level. We have already reached the blue level, currently touching it exactly at the moment when the price was indeed at a loss. We go to M30 and see that on M30 we touch the red level here, and we can clearly observe that at this point in time, whether there was some unclear touch or not, let's not guess right now. Well, let's assume we didn't touch here, although in principle we already made a profit. But okay, we didn't touch here. Then the price moved around, came back to the red level, which is already in the loss area for closing, while at the green level we have profit. Thus, we could have waited a little longer for this trade and closed it at a green profit. And we basically don't need to do anything ourselves. The utility will handle everything. It will close if it cannot close. At the red level on M15, when it will try to close at all the following levels of the sigma indicator on the following time frames, including H4. This time frame needs to be set here to H4. How to set up the sigma settings? I will explain now a bit more. That is, not sigma, but the utilities. So here we open. We have the starting level here. The starting time frame is M15, and the ending time frame, the finish, is H4 that we set. We set the sigma level for closing at 3, which is the central red level, and here, we should only set the profit with this function. Thus, we apply these settings. To elaborate further, the sigma level of 3 is crucial as it represents a balance point. Setting the profit with this function ensures precision and accuracy in our operations. By applying these settings, we aim to achieve optimal results. Thus, the utility, if it cannot close a profit on the time frame you are trading, will attempt to close at all subsequent levels up to the H4 time frame. Let's analyze another trade, another signal, so that you clearly understand what we are talking about. Let's take a signal like this, after which we will have a significant loss here. It won't be huge, but it will be a big loss, and it will be unpleasant for us. This specific signal on the timeline is located exactly here, and the level of this signal is precisely here, so we made a buy trade. After the signal, the quotes moved, reversed, and touched the red line in the losing area. We incurred a loss of 130 points, but as you can see further, the quotes reversed, and the price entered a profitable area for us. It was necessary to wait for this somehow and to fix it somewhere. But the utility does not have a human brain. It is an algorithm that is programmed as follows. So, if we are unable to close in profit at the red level on M15, it looks at the green level. Can we close in profit? We have reached the green level, and the quotes are in the losing area, which means we are at a loss. No, we will not close. That is, the utility does not close. At the blue level, it rechecks whether this is a losing area or a profitable one. Losing. Let's move on. On M30, we looked at the blue, green, and red levels. Loss, green level, loss, blue level, and again loss. We move to H1. Here, the red is at a loss, the green is at a loss, and the blue is already in profit on this time frame. The utility has turned a profit. She saw that at the blue level we are making a profit, and she will close the trade right about here, as soon as the price breaks out and touches the blue level of the profitable area. Thus, instead of incurring a large loss of approximately 130 points on M15, it will wait for a touch on H1 when the price reaches the sigma level in a profitable area, and only then will it close the signal. It will close it here, resulting in either a few points of profit or zero. In any case, this is better than closing the trade with a significant loss. In this way, the utility helps us close trades, thereby avoiding significant losses, and then the profit factor will be much higher. Therefore, our task is simplified. Yes, if we trade according to the algorithm of smart closing, we still need to find the most profitable settings for every single asset. But this will not play as crucial a role as with the basic settings of the indicators I mentioned in the previous lesson. When the time frame for the start and end of trading is set to the same M15 time frame on which you trade and close the trade regardless of the results, this will be your basic setting from which your profitability will depend on the profit factor and the number of profitable trades. If you set the time frame to H4 and close the trade with profit, then the utility, if it cannot close on M15, will continue to explore all the levels that follow on the M15, M30, H1, and H4 timeframes. And at the H4 level, 30, 1, and 4, and at the level of H4, regardless of the outcome, it will already close the trade, but the probability of incurring a loss at the red level on H4 is much, much lower. Thus, we significantly increase our profit factor. So, you now have two options for closing in your expression. This is the basic version and the smart closing option. In the next lesson, I will explain how to use averaging, which means increasing the profit factor several times more. This will be a riskier trading approach, but also more profitable, and each of you will be able to find what truly suits you. Some people will prefer the basic option, some will prefer the smart closing option, and some will prefer the averaging option. So let's learn first, and then we'll start applying it in practice. See you next time.